Can we trust this rally? If we can, is tech set for a big rebound? Is AMP a rebound stock? And Qantas, is it set to fly higher? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, I checked the numbers today. Our market is up 11%. Big rally, but can we trust it?
Yeah, look, I think, Peter, you've got to be a little bit careful still. Obviously, a quiet week in the US ahead of Thanksgiving. The market closed on Thursday, half day on Friday. So nothing's going to happen tonight.
No.
Yeah, they're looking optimistic, but I just think we've got to be a little careful because, you know, we get another batch of inflation data in December the 13th. And if that happens, to confirm what we all think, then, you know, that's okay. But it's still, you know, one set of monthly data I don't think is quite enough to change the overall psyche of the market.
And so December 13, that CPI number is going to become critically important to this rally. And if it's a better than expected number, boy, I think the rally will continue because they'll factor in the December increase in interest rates is likely to be 0.5% rather than 0.75. And then they'll say, oh, well, we're close to the peak, and the market will love it. Flip side, of course, is if it's not a good number, they'll say, oh, we've jumped the gun, therefore it's a sell-off, which I would use as a buying opportunity, Paul, in many ways. But I think you can't really say 100% hand on heart you can trust this rally.
Yeah, I mean, a big rally. I mean, the key is still probably the bond market. You know, 10-year US Treasuries down to 3.75 last night. They were at 4.3 a couple of weeks ago. So it's been a big rally in the bond market off a huge...
And the bond market is always right, Paul.
The bond market is always right. So, you know, I just think just be a little careful. You know, Australia looks okay. We don't subscribe to all the negative talk about recession coming next year, but ultimately, we're still taking our lead from the US. It's inflation and interest rates that are the key, not about the recession. So that's what we have to see. So, you know, just as we were surprised, I guess, by the inflation data on the way up, maybe this is what happens on the way down. But I think we need to see a bit more confirmatory trend. That's just my view.
And the fair question then is tech set for a big rebound? This is put in context. A lot of normal people have thought interest rates are up, tech stocks crash. If interest rates are about to pause and maybe eventually come down, maybe later in the year, should you be buying big tech? But there are some smarties out saying, oh, big tech's not going to do as well this time. What do you think, Paul?
Yeah, look, I think there's going to be value there. I mean, the market's not buying the big tech. This rally in the US is largely about things like traditional industrial companies, you know, some consumer goods companies, energy companies.
Value companies.
And value companies is not big tech. It's big tech's edging up, but it's not going up. It's not leading the charge. So there's certainly value there. And I think that probably... You know, again, all the tech companies, you know, the big trend in October is all done layoffs. They'll cut back on their workforce.
Good for their bottom line.
Good for their bottom line and probably gets them to be a bit more focused on what they're doing. So, yeah, I mean, and again, they are all multinational in the sense that they are dependent on the US dollar. A lot of their sales are offshore. And the high cost of the US dollar is hurting them, right?
That's right. But if interest rates start to peak and they then think interest rates are going to fall, the US dollar will fall. It will help them. I think personally, it's a guts play, but I would be happy to buy, you know, the big, really great quality tech companies in the US and be patient. It might take me a year to see the money come around, but these are very good companies, and I think they'll eventually come.
And I think you've got to do the same in Australia. Just be patient. It's not going to happen overnight. It doesn't mean prices could go lower, but I think you've just got to look at this and say...
Well, I think Xero is a classic case. Great company, currently not being loved by the market, but eventually when tech is loved again, Xero will be liked, and we also think the company's good for other reasons. Let's go to the final one, Paul. AMP. I got shocked at the SON conference in Tasmania where genius fund managers are asked, and Jim Bailu is one of those, are asked to pick a company that they think will do well this year. And one guy came out with AMP. It shocked me, I'm sure it shocked you. But then when you have a look at it, it's up about, 30% since its low in July.
Yeah.
Crazy.
It is crazy. I mean, look, and just in fairness, it's up 30% since its low. It's still down massively from what it was, a couple of years back. Look, AMP's always been a sort of a break-up, some of the pieces stock, and there's always been value there.
Because AMP Capital, private equity would buy that in a heartbeat, wouldn't it?
And to be honest, look, their traditional advisory, funds management business, super business, is probably some of the pressure in terms of people getting out of some of their funds has eased, right? Yeah. We aren't hearing great news about big outflows from AMP. So, look, it's not a stock I would necessarily go after, but always value investors. Markets, we know, go too far on the top and they go too far on the bottom. Yeah. And eventually people will, like some of the genius fund managers will say, hey, go on, there's value there. And then they talk their book a little bit and suddenly everyone's on it. So interesting just to you to note. And another company, Peter, that's doing well today, Qantas again today, gives us a chance to bitch and moan about the service, but
and the prices,
but they've upgraded guidance again today, so by another $150 million. Only I calculated 43 days since the last market update. No. So it didn't take long, so they've increased their forecast for this first half profit between $1.35 billion and $1.45 billion. That's up $150 million on their forecast just 43 days ago. Yeah. Also said that net debt is massively lower than they expected because people are just giving them so much cash to buy fares. Right. And they're not spending so much on the capital. Yeah. So, and they've alluded to another capital return, another buyback starting potentially to be announced in February. So, look, Qantas will go up today. We've said it, stay long Qantas, right? We've
been fans of Qantas. I'm a shareholder of Qantas. I still think they are really treating consumers pretty roughly.
Well, they are, and I must admit my recent experience wasn't brilliant, but out came the figures yesterday, which showed that Qantas had the lowest level of cancellations, the most on-flight departure times and the most on-flight arrival times out of all the airlines in Australia. So what choice do you have, Pete?
Well, as I've always said, if you whinge about the banks, get even with them, buy their shares. Similarly with Qantas, if you whinge about Qantas, buy their shares. At least you'll get some benefit from the fact that they're actually doing very, very well. I'm Peter Switzer.
I'm Paul Rickard.
We're mad about money.